Good evening and welcome to the Global Silver Evening News for Monday, January 12th, 2026. I am your host, and tonight we are tracking a historic day for the silver market. As the sun sets on the second full week of 2026, the silver world is reeling from a series of unprecedented events that have sent prices to levels once considered impossible by mainstream financial institutions. The lead story: silver shatters. All-time highs. We begin with the headline that is dominating every trading floor from London to Tokyo. Today, silver futures for March delivery have officially touched a historic lifetime high of 83.90 per ounce on the COMEX. In a single trading session, the white metal surged by a staggering 5.8%, outperforming nearly every other asset class in the global market. This rally is not happening in a vacuum. It is the culmination of a perfect storm of geopolitical instability, institutional scandal, and a physical supply crisis that has been brewing for years. Investors are fleeing traditional equities and currencies, flocking toward the security of tangible assets as the global financial order faces one of its most rigorous tests in decades. The Powell investigation, a central bank in crisis. The primary catalyst for today's explosive move is a bombshell development coming out of Washington, D.C., that has shaken the foundations of the U.S. Federal Reserve. Federal prosecutors have officially launched a criminal investigation into Federal Reserve Chair Jerome Powell. The probe is reportedly centered on the massive renovation costs of the Fed's headquarters, but the implications go far deeper. In a move that has sent shockwaves through international currency markets, Chair Powell has claimed that the current administration, under President Trump, has threatened him with criminal indictment. This open warfare between the White House and the world's most powerful central bank has raised dire questions about the Fed's independence. Markets hate uncertainty, and the prospect of a politically compromised central bank has triggered a massive sell-off in the US dollar. The dollar index has slipped significantly today, trading at 99.03. As the greenback falters, silver has stepped in to fill the void. For international buyers using euros or yen, silver has become the primary hedge against what many are calling the sovereignty crisis of the US monetary system. The Great Divorce: paper versus physical. One of the most striking features of today's news is what analysts are calling the Great Divorce of 2026. While the paper futures markets in New York and London are seeing wild volatility, the physical reality in the East tells a different story. In Shanghai, physical silver premiums have hit a record $8 per ounce over the spot price. This massive spread indicates that the paper price, often influenced by high-frequency trading and institutional short selling, is failing to keep up with the actual demand for physical bars and coins. We are seeing a historic decoupling where the world's landlords, those who actually hold the physical metal, are refusing to sell at the prices dictated by the casino, the paper futures markets. Reports from the London Bullion Market Association, LBMA, indicate that silver's rise is now meteoric, with the metal gaining over 144% in 2025 and continuing that trajectory into this new year. The sheer volume of physical silver being moved into private vaults is at a 20-year high, as institutional investors realize that you cannot print a silver bar. Industrial demand, the engine of the rally. While geopolitical fear provides the spark for the price hike, the fuel is coming from a global industrial sector that is desperately hungry for silver. Tonight, we look at why silver is no longer being viewed just as a precious metal, but as a strategic industrial commodity. The AI supercycle. The explosion of artificial intelligence has created a new, massive demand vector for silver. AI-driven data centers require high-efficiency electrical components, precision contacts, and advanced thermal management systems. Silver, as the world's most conductive metal, is the only material that can handle the extreme power loads required by the next generation of supercomputers. Every semiconductor and circuit board being produced for the AI revolution is competing for a shrinking pool of available silver. The green energy transition. The solar industry is currently consuming nearly 20% of the world's annual silver supply. As we move deeper into 2026, the silver intensity of solar panels is increasing as manufacturers move toward higher efficiency N-type cells, which require more silver paste than previous generations. Similarly, the electric vehicle (EV) market is entering a phase of rapid expansion. Modern EVs use significantly more silver than traditional internal combustion engines, utilized in everything from battery management systems to autonomous driving sensors. With global EV adoption targets for 2030 looming, industrial buyers are actively stockpiling silver to ensure their production lines do not go dark. Supply side, a market in structural deficit. The news on the supply side remains grim for those hoping for lower prices. We are now entering the 6th consecutive year of a global silver supply deficit. The Silver Institute reports that the gap between what is mined and what is consumed has widened to a staggering 200 million ounces annually. The mining crisis in Mexico. Mexico, the world's largest silver producer, continues to face regulatory headwinds. Recent changes to mining laws and environmental restrictions have caused a 5% drop in expected output from key regions. Furthermore, we are seeing a lack of new primary silver mines. Because silver is often mined as a byproduct of copper, lead, and zinc, production cannot simply be turned up because the price of silver is high. It depends on the demand for those other industrial base metals, which is currently lagging behind the silver rush. The inventory drain. The most alarming data point of the evening comes from the COMEX registered inventories. The silver actually available for delivery to satisfy futures contracts. These inventories have plummeted by over 70% since 2020. Market observers are warning of a potential delivery failure if a major industrial user or central bank demands physical delivery of their contracts and the vaults come up empty. Institutional retching and margin hikes. In a move that many retail investors are calling a kill switch, the CME Group today announced a massive 47% increase in silver maintenance margins, raising them to $32,500. This is a classic institutional response to extreme volatility, designed to cool the market and, as some critics argue, protect the large bullion banks that are currently trapped in massive short positions. Large banks like Citigroup and JP Morgan were caught completely off guard by this rally. In early 2025, many of these institutions were predicting silver would average around $32 to $38. With silver now knocking on the door of $84, these banks are facing billions of dollars in paper losses. The term retching is being used across trading desks to describe the current state of the paper silver system. The banks are attempting to force a mean reversion sell-off, essentially trying to scare the market into lower prices to save their own balance sheets. But so far, the physical market is laughing at their efforts. Every time the price dips, strong hands in the East and industrial giants are stepping in to buy the correction. Central bank diversification. For the first time in recent history, we are seeing evidence that central banks are not just buying gold, but are quietly adding silver to their strategic reserves. While gold remains the primary reserve asset, the gold to silver ratio is currently under intense pressure. Historically, this ratio has sat around 15.1 or 30.1. In recent years, it's stretched to over 80.1. Today, as silver outpaces gold's gains, that ratio is collapsing. Central banks in emerging markets, particularly those looking to de-dollarize, are finding that silver offers a high beta way to protect their national wealth from the volatility of the US financial system. Global geopolitical flashpoints. Beyond the US Federal Reserve crisis, several other international events are supporting the silver bull run. South American tensions. Protests and labor strikes in the silver belt of South America are threatening to further disrupt the supply chain. China's export controls. China has implemented new export licensing rules for silver and related technologies, restricting the flow of the metal to Western markets. The Middle East. Continued instability in energy-producing regions is keeping the safe haven bid for precious metals at an all-time high. Trade wars. Rising concerns over new tariffs and a potential trade war between major economies are making physical commodities the only reliable neutral currency. Analysis. Where does silver go from here? As we look toward the remainder of the week, the question on everyone's mind is, how high can it go? Some of the most aggressive forecasts, such as those from the Oregon Group, are now seriously evaluating scenarios where silver hits 150 per ounce by the end of 2026. While that may seem extreme, the fundamentals are unlike anything we have seen in the last 50 years. We have a shrinking supply, a record-breaking industrial demand supercycle, and a collapse in confidence in the world's reserve currency. However, a note of caution is necessary. With margin hikes and institutional pressure, we should expect intermittent profit-taking. The road to triple digits will likely be marked by sharp, violent corrections as the paper casino fights to regain control from the physical landlords. Experts are advising that the floor for silver has now moved significantly higher. Whereas $20 or $30 was once the standard, many analysts now see $70 as the new neutral level. Any dip below that mark is being met with immediate and aggressive buying from industrial users who cannot afford to let their inventories run dry. Closing summary. To recap our top stories this evening, silver has hit a lifetime high of $83.90 per ounce, driven by a 5.8% surge today. US Federal Reserve Chair Jerome Powell is under criminal investigation, sparking a crisis of confidence in the US dollar. Industrial demand from AI, solar, and EVs is creating a structural deficit that mining production cannot meet. The CME has hiked margins by 47% in an attempt to stabilize the market, as bullion banks face historic losses on their short positions. Physical premiums in the East continue to soar, signaling a massive disconnect between the paper price and the reality of the physical metal. As we move into the overnight trading sessions in Asia, all eyes will be on the Shanghai Gold Exchange to see if the East continues to lead this charge. The world is watching the white metal not just as a commodity, but as a barometer for the shifting tectonic plates of the global economy. Thank you for joining us for the Global Silver Evening News. We will continue to monitor these breaking developments as they unfold.